Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra. This is Market Today, and with me on this show joining in is Bhatnagar as well. This is a show where we'll help you understand the closing action on the D Street. Also joining us will be specific market guests who will help you understand which way are the markets headed and the strategies that you must follow. But good afternoon. It seems like the markets are consolidating, just like how we were talking about. We've given up that 21,650 level also on the Nifty right now. Barring the pharma and the metals and oil and gas space, rest of the sectors look weak.
Absolutely, Sakshi, and in our morning commentary I had mentioned that if you go back to the morning commentary that levels of about 21,550 are opening up on the Nifty. And remember, this was before markets had opened. Today's high is 21,760 when the markets had opened. And will you believe it? The low of today is 21,560. So I think I just got lucky. And from then on, we've seen a bit of a recovery happening from then on. But like I said, Sakshi, these are lower lows that the Nifty is making. The 3-day low of 21,680, 21,677 and 21,678 has been violated, and much will again depend upon where the Nifty closes, but let's see how things change. And at the moment I think there are two pockets of strong investor price volume and momentum action. We'll take a look at the pharma space in a while, as also we'll take a look at the PSU space. Both of them are abuzz with gains. But the point that I'm trying to make, Sakshi, is that on the Nifty, now the trading range has increased. The difference between high and low of today is about 192 points. And let us see at what level does the Nifty close. At that point of time, you have, as far as the market watch is concerned, about 9 out of 10 index heavyweights are in the red, led by L&T 2.3% lower, 34.41. Kotak is down 2%, ICICI Bank is down 1.5%, Lever and Infosys are down about 1.5, 1.7% respectively. Reliance is up marginally, 25.95, and you have HDFC Bank flat at 16.97. So it's an interesting theme that's happening, and not much of volume again in today's trade. So I would just see this as a whipsaw the fall. But the fact is that lower lows are being made on the Nifty at record levels, and you see this propensity of booking profit at higher levels. Sakshi.
Absolutely. Let's also welcome our guest on the show. Sharad Avasthi now joins in. He's the head of research at SMIFS. Sharad, welcome to Business Today TV. Happy New Year to you, to your team and to your loved ones as well. We're welcoming you at a time when there is slight nervousness among the investors as to whether after the stunning rally that we've seen in the markets, there is enough strength that the bulls have to carry on that upward trajectory. What's the sense that you have as far as markets are concerned? Would you look yesterday and today's volatile action and slight dips that we are seeing as a buy on dip strategy that you'd like to advise investors, or could this be the beginning of a deeper correction?
Happy New Year to you, to Shailji and all your viewers and your team as well. Uh, I don't think this is a long-term deeper correction that we are looking at. But if you want to get a view as to how the first 6 months could be, I think yesterday and today, this could be replicated over the next, say, 3 to 4 months before the elections, where you could see a lot of volatility. But on balance, I think the view at the end of the year would be positive only. We are more bullish about the outcomes in the second half of the year as the bond fund inclusion, etc., all that starts happening, the elections are over. I think major reviews will happen after that, or major upsides from here on. So for the next 2, 3 months, you would be more or less event based and news based, and some quarterly result based movement that you would see. So I think largely range bound over the next 3 to 4 months. A lot of volatility based on news and events that happen throughout at the macro, micro, and at the company levels. Beyond that, across the board rally, I don't foresee over the next 2, 3 months. But I don't even foresee a deep correction. So mostly range bound kind of activity. It should be ideal for people who can pick good stocks at good valuations. I think that that segment will give you a lot of opportunities. But it might not be a runaway kind of market which we have seen over the last 2, 3 months where you could have bought anything and made money. And now you have to be more specific regarding what you are choosing.
Okay. When you talk about runaway kind of a market, not sort of being on the radar, Sharadji, one, a very happy new year.
Shailendra, I can hardly
and
hear
a
you.
very warm welcome to you on market today. It's we always
No,
really appreciate your presence here. I just wanted to understand. What are these stocks that sensible people with deep pockets and a slightly longer investment horizon can add to their portfolios. A very warm welcome to you and happy new year.
Thank you. I think something like a UPL among the front lines could be a very good bet. Among the frontline stocks, I think if you look at the large cap space, it's very hard to find bargains right now. But I think within the banks, Kotak could be in a very sweet spot. HDFC, SBI is a well-known idea, so I'm not repeating it. But Kotak, I think, is something where the management changes and the way they are trying to change the trajectory of the bank to a technology-enabled solution provider. I think they're looking at the next gen. So that is one stock which you could hold for targets of around 2100, 2150, assuming the same 3.5 times price to book the bank gets. And I think the management change transition, as it happens smoothly over the next 2, 3 quarters, there is a high possibility that you could see a lot of re-rating in this bank. Uh, United Phosphorus, obviously, I like the story, but maybe depending on the type of slowdown we are seeing across stocks normalizing for most agrochemicals. It could be a bit longer wait, but I think the current valuations offer you ample scope. I don't see much downside from here. Samvardhan Motherson could be one idea you could look at. I think valuations are attractive. It is trading at what 10, 12 times maybe, and I think it can easily trade at 15, 20 times. So initially, you can look at Motherson for targets of around 140. Most of the auto space is doing well, so that should percolate into good business for Samvardhan Motherson as well. The PI industries could be one idea among the large cap space. I think I've spoken about it earlier also. And I think this overhang regarding this new players coming in China, again, agrochem, so maybe it may take a bit of more time. But the type of capex they have done, the recent acquisitions that they have done as they turn it around, I think there is a high probability you're looking at a company growing at 18, 20%. Even if it trades at 30, 35 times, I think fair value should be around 4,500 in a year. So these are some ideas which I feel 1 or 1.5, 2 years you could continue to hold, and they have some decent upside possibility of strong re-rating among the large cap space.
Okay. Well, a lot of stocks that you've talked about, UPL, Kotak Mahindra Bank, Samvardhan Motherson Sumi, PI Industries, these are the stock picks that you've picked out. I also wanted to take a sense of how would you advise investors of the mid and the small cap space. They're sitting on handsome profits right now. What is the way forward? A lot of experts are saying that perhaps this space is now overstretched, overheated. Is it the best time to take some chips off the table, or should one stay invested?
I think again not across the board, but if there are stories which have started trading at say 40-45 times 2 year forward and the growth rates expected are similar around say 30-35%, then most probably they have more or less peaked out in terms of where they are right now. But so the small cap, mid cap space is a very vast space. I don't think you can have a blanket opinion about everything there, because there are many stories that are coming out of that space that can, evolve into something else over the next 2-3 years. The renewable energy space is doing fine. The defense stocks, they are running around. A lot of opportunities opening up for them. And for the smaller players, getting a big order or getting something large done, suddenly it manifests into something else. So I think that is one thing you need to look at small cap, mid cap ideas. Recently, amongst our coverage universe, I think steel strip wheels is a very good idea for targets of around 350-400. One of the new units is becoming operational in Feb. They are expanding the alloy wheel capacity from 3.2 million to 5 million units. The AMW acquisition should also start helping them. The export should start picking up. So I think Steel Strip Wheels Limited or SSWL could be a good bet, where you could see very decent upside from here. Even conservative valuations, 8-9 times EV, but I think you should be looking at 350-400 over the next 1.5 years. So that could be a good bet amongst the mid cap space. So Crompton would be a good bet among the mid cap space. I think they have a lot of business stocks around the TAM expanding 3, 4, 5 times. And I think as the propositions roll out, you could see substantial improvement there as well.
All right. Crompton and steel strip wheels, the two picks from the mid-cap space. We are seeing some recovery come in the markets as far as the Nifty is concerned. It's now down only 62 odd points, 21,677. It's recovered about 120 points from the day's low as well. So it looks like a repeat of yesterday, Shell. We did see a lot of recovery happening in the last few minutes as well for the markets. Is it going to be another day when it comes out to be a buy on dips and bulls not running away just as yet?
Well, Sakshi, I just wouldn't stick my neck out into getting into Nifty at these levels. As I have said earlier, the risk reward is no longer in favor of bulls to the extent that was about 2, 3, 4 weeks ago. We are just sort of putting this point across that you've seen a 120 point recovery from day's low. We really don't know what is the most likely outcome. Yesterday's move that you talk about, Sakshi, in the last half an hour, is actually the weighted average close. So that was the reason why the index moved up so sharply in the last 1 minute or so, because the last half an hour the average price is taken, not the closing price. So that was the reason for yesterday. But it's at 2:42 p.m. and a very sharp move coming in on the index from say 12. Let's just say 12 noon onwards. So the second support level of 21,600 has been held. Support 1, which is 21,670, has been taken out. Now let us see what it is for the moment. You have the 21,700 call strike, which is acting as a resistance. We'll see how that goes, but a fairly strong move coming in. Let me just look at how the move is getting translated in terms of pullers and draggers. We'd like to mark that as well. That is the reason why you see the Nifty moving up and down. Okay, Reliance is contributing 12 points to the gain. Sun Pharma is contributing 10 points. Bajaj Finance 7 points. Bharti Airtel and ITC roughly 6 points each. To you, Sharad, today's rally has been in the pharma space. The index, of course, is at a record high, 2.5% higher, 17,273. Lots of shares buzzing. Lupin, you have a record high on Sun Pharma, a record high on Aurobindo Pharma. What would be your top pick from this sector, given the fact that money is now moving into defensives after booking profits in, how should I say, high beta counters as well as blue chips?
Yeah, so I think Dr. Reddy could be a good bet. If you look at the comparative valuations, it is still trading at compelling valuations somewhere around 20 times forward. Rest of the pack is around 25 to 30 times, in some cases even higher. Some of the names you took, Aurobindo, etc., have seen a very strong re-rating from the lower levels where they were trading at what, 5, 7 times. So they have moved to normalcy now. Most probably the corporate governance issues are behind us. But Dr. Reddy, I think they have a lot of triggers. The more focus they develop on the Indian business, there is a probability that margins should go up. Inorganic growth opportunities could be another trigger for them. Small acquisitions here and there, they keep on doing. And I think as the Indian business grows up and the pressure in the US business comes down, there is a high probability that the forward numbers could be re-rated a bit. And in terms of valuation comfort, I would be most comfortable buying into a Dr. Reddy at 20 times. And I think the new product basket that they have in place, they have a lot of leading drugs. That should also help. And the new launches that they do over the next 1.5, 2 years, that should also help. So I think I would be very positive on Dr. Reddy's amongst the large cap.
Okay. Right. So that's as far as the pharma pick is also concerned. Apart from this, would you also be looking at the oil and gas space at all, Sharad, with the kind of momentum that we are looking at in OMC stocks? We're also looking at the gas stocks, for example. These are again small ticket items that are seeing a lot of attraction among investors. Is this a story that one should track for a medium to long term?
I think if you divide it into three segments, it is the gas stocks, it is the OMCs, and typically E&P companies, which is the oil companies like Oil India and ONGC. Regarding OMCs, we have been bullish for quite some time now. I think the long-term trajectory, two things happening for them are very good. Lower oil prices and most probably a stronger currency next year onwards. So these should be very well for, these should be very good things for OMCs. But at these valuations, I think they're trading at what, mostly somewhere around 7, 8 times now. Uh, at best, I think they would trade somewhere higher at around say 9 times. So you could be looking at another 10, 15% upside for most of the OMCs. HPCL could be your top bet. I think valuations there are more attractive vis-a-vis IOC or a BPCL. Though IOC would fare better on terms of dividend yield, but on balance, I think HPCL would be a good bet on the OMC side. I think the valuations are still 4, 5, 5, 6 times, and there is a high possibility it should trade at somewhere around 8, 9 times. They have also announced some spin-off of divisions, etc. So I think that should also aid some momentum on the stock. So I think HPCL for around 500, 550 looks like a decent bet. Uh, Amongst the oil companies, I think ONGC and oil both are still trading at very attractive valuations. So I think there also you could be looking at some upside from current levels, a decent upside actually. So looking at ONGC, it's still trading at 4, 5 times. Optimal targets could be around 8, 9 times. So you're looking at maybe 300, 320. Uh, Oil I haven't really seen recently, but I think barring this, the gas space, Gale, I think 180, 190 is a fair target for the stock. But I would be more happy buying something like GSPL. I think most of the valuation that you have on GSPL is just Gujarat Gas being translated because they have a large holding in Gujarat Gas. They are expanding the pipeline segment to a substantial amount, which should happen over the next 1 year, 1.5 years, September and December. So I think GSPL could be a very good bet where we could see addition of around 100, $150 from current levels. So that's a decent upside for GSPL. I think demand for gas would continue to go up the way government is planning the addition of gas as a major fuel source, alternate to normal oil and burning of it. So I think GSPL could be a good bet within the gas space for targets of around 400, 450.
Okay, I'd like to just mark a stock which is Coal India. Sakshi, we've seen a block deal of 2 crore rupees in a single trade at 394.70 and followed that by another 9.8 crores. Remember, Coal India is something that we discussed in the morning. There was a Jeffries report that pointed out to a lot of positives in this particular company. It's the top gainer on the Nifty at about 397.70, and of course this is something which is about a 7-8 year high on the counter. A 374, 394 is the last time that we saw in August of 2015, and today's volumes have been fairly substantial when it comes to the price action. So that's what is clicking as far as the Nifty is concerned. And of course, what is back in focus, Sakshi, is players like OMCs, HPCL and BPCL. Remember, they were beaten black and blue 2 days ago when there was this news that the government is wanting to cut down on retail pump prices to control inflation, and that had hit the OMCs the most, because about 50% of that 10 rupees was to be borne by OMCs. But at 397, again, there has been a fairly decent buying on HPCL, which is now at 413.25. What else is clicking? Old favorites, which is the Adani Group, Adani Ports, now 3% higher. Fairly strong traction coming in on that particular space. It's the second top gainer on the Nifty, up 3.1%, and this is consumed by a very nice uptick in open interest, which is about 1.7%. These are the two stocks which need to be highlighted when it comes to the Nifty. Sakshi, what are you watching?
Two stocks clearly in the Nifty 500 basket, Shell. One is Alok Industries. It's up by 20 odd percent. Very small ticket one, 25.8, and there is some news flow that Reliance Industries is also interested in this company. I'll just throw the news as well for all our viewers. The other one is Engineers India. Again, 11% surge is being seen on this one as well. So these are the two stocks that just came popped up on the screen. And I'll give you the Alok Industries news flow now. Reliance Industries has acquired 3,300 crores, 9% non-convertible redeemable preference shares of Alok Industries for 3,300 crores. So that's the news that's coming in. And on Engineers India, there's been a momentum of about 11% odd surge coming in. Do you track any of these stocks, Sharad? And would you, want to share your view?
Not Alok in specific, but I think Engineers India have been very bullish. I think still valuations are attractive, even if you look at the cash component that the company already holds. The capex from OMCs is very aggressive. It should work very well for Engineers India. And I think the international consultancy business should also do very well. So there is a possibility that forward numbers could be better than what we are expecting right now. Even if you look at current valuations, it is trading at what next year we are expecting around 9-10 rupees kind of earnings. Based on that, it's still at 20 times. I believe within the engineering space, this could be one of the cheapest stocks that you have available. And adjust that for the cash that they already have on the books and strong cash flow origination that they can do, and some re-rating. I think there is a high possibility that EIL could be rated even higher from current levels if the forward numbers are updated by 10-12%, which is very easy for an engineering company. I think you're looking at 10 rupee kind of earnings and a 25 kind of multiple. So you could be looking at 250 kind of levels for Engineers India very easily.
It's actually, this is the highest on Engineers India that you've seen since November of 2017, and if you slip back a little, it's also the highest since June of 2010. Between that point and now, there have been two stock splits. So deep value has already been created for long-term shareholders, but fair point, it's trading at a PE of 22, and if you look at the cash on books, it's of course a zero debt company, 1,200 crores cash on book, and a market cap of 10,500 crores versus a revenue of about 3,330 crores. Very profitable. Trailing 12-month earnings have been 472 crores. Clicking away to glory, Sakshi, is Zomato. You are the one responsible. You ordered a lot of stuff for that party that you had overnight on New Year's Eve. 129.25.
Well, absolutely, Shell. I did order from Zomato quite a lot over the weekend. I'm sure you did too, and so did Sharad as well. We were all ordering in, and that was visible from Deepinder Goyal's tweets that talked about how much money was spent only in giving tips to their delivery partners. About 97 lakh rupees odd or so was just going in tips right there. And now Zomato has increased the platform fee to 4 rupees in key markets, and that's perhaps the trigger. Many of the brokerage houses, I believe in CLSA as well, is now raising the targets for the company now even to 168. Sharad, your view on Zomato?
See, valuations look a bit stretched for Zomato. Even if I consider optimistic levels, they are still trading at what, 6-7 times next year. But I think with these ratings and updates, these things can change very fast. The scale is huge. Like at a time we used to discuss Twitter and Facebook, the model is there. Now the revenue and profitability model needs to be worked out. I think Zomato turning around was a very good, very big event. So that's been very positive. At the scale at which they are operating, if they can pull some triggers here and there, I think the earnings can improve at a very rapid scale. But considering it is trading at already 7 times 12-month forward EV to sales, I think the forward scope should be very limited. Very optimistic targets, you could have another 10% from here. But I think with that kind of mood that we have in the stock markets particularly, I think beyond this, there would not be so much partying and so much means hype for the Zomato order booking. So I think this could be one of the top quarters for them. So maybe the quarterly results could give you some impetus, some more fillip to the price. But at these prices, 7 times EV to sales, even if you consider 10-15% kind of addition to the top line also, I think even then there's not much upside. So optimistically, I would say another 10-12% maybe. But with the disclaimer that these are stocks that can fly anywhere, you don't really know. So I think if I were to invest, I would think these valuations or maybe here to another 8-10%, the stock would be fairly too overvalued.
Okay, but sir, do you also have any other stock coverage from the new age tech basket? Are you bullish on any other, say, Paytm or a Policy Bazaar? Maybe delivery also is ticking higher in trade today. Any other stock that you prefer?
The Paytm after this correction, I think now makes more sense to get into it. I think the loan business that they were getting into, it's on a learning curve. They will learn from what they've done. Normal growth has been nicely, pricked by the RBI. And I think gradually they are getting into a mode where they are not just talking top line, but they're understanding the importance of bottom line. The subscribing members have gone up, and I think that is a number that has huge potential to go up even in future. This would be one stock I would bet on. Another stock, I think, car trade, where a lot of re-rating could happen amongst the smaller or more newer stocks. I think Yatra is one stock which I looked at recently, and I think that is one story that can do very well. I think that is a doubler or something kind of return from that. I think that is very much possible with the kind of travel and tourism impetus that we are seeing. So I think if you want a smaller, newer bet, Yatra, Paytm would be one for the long term. I think a lot of improvements can happen to those numbers over the years. And if you want safe, that is already delivering numbers and expected to improve further, car trade could be a very good bet to bet on from here on.
Okay. Sakshi, I just want to make a point that Sharadji is a classical analyst, and even if he had ordered biryani from Calcutta on Zomato, he would not have preferred the stock, because he likes, how should I say, stocks with physical infrastructure. This is how people were taught how to research. So he will be very, very good at Engineers India, ONGC, where you have physical infrastructure, you see a balance sheet, you see valuations moving up and down, you have a price history going back 25, 30, 40 years. Zomato का ठीक है, जब 200-250 रुपए हो जाएगा तब देखेंगे. It has to have, maybe 5, 7, 10 earning quarters to see a trend. And that's the reason why a lot of people prefer to have 15 years of financial data before they want to commit on long-term portfolio holdings. So stocks that double in 15 years or maybe go up 10 times are the ones that will again go 10 times higher over the next 15 years. It's all fine, ये सब चलता रहता है. शरद जी बहुत ही मंझे हुए खिलाड़ी हैं और इन्होंने बहुत दुनिया देखी है. A very good view on ONGC as also on Engineers India. but Zomato Sharad ji ko pasand nahi aata. We'll discuss this and a lot more on the other side of the break, where we'll be talking about a good amount of stocks from the fertilizer space.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome back. You're watching Business Today Television and this is Market Today. I'm Sakshi, with me Bhatnagar. Also joining us now and Sharad is Vaishali Parekh, our other guest on the show, AVP Technical Research at Prabhudas Lilladher. Vaishali, good afternoon. Happy New Year to you. It's a great time to host you. We've had spectacular 2023 when we discussed some innumerable stocks which went up multiple times, which you have also discussed with us on the platform. Why don't you tell us your top stock picks for the 2024 series now?
Very good afternoon and Happy New Year to Sakshi and Shail. Yes, and thanks for having me on the show. And 2023 has been a very, very fab year for all of us. And I'm sure we will be looking forward to good times ahead. So I would say, well, sector-wise right now, I feel fertilizer stocks are looking very promising. So also is the case with chemical stocks. So, well, yes, it is going to be a sector rotation. There is going to be some change of ideas as far as the mid caps are concerned. So, yes, for now, I do like chemical stocks and fertilizer stocks.
A very warm welcome to you, Vaishali. Our Lady Luck is with us on the show. And let's talk about the fertilizer space. Vaishali, Happy New Year. Where else do you see this Happy New Year smiley on the markets? Where are you putting in money? And where are the most progressive charts within the sectoral space of fertilizers?
So as far as fertilizers are concerned, well, we had started with GNFC and GSFC. But now I think new buying opportunity as far as technical levels are concerned, I'm looking at Deepak Fertilizers. So Deepak Fertilizers not participated comparatively because RCF has given us return. We are already midway with the rally, but Deepak Fertilizers, if you see, the stock has fallen right from 990 levels and now showing signs of bounce back. So I would say keeping 660 as a support, and once the stock moves above 700, 705, I think this is ready for a takeoff towards 750 and 800 to start with. So I think Deepak Fertilizers for now looks very good to me.
Okay,
Right.
That's one. What else catches your fancy?
Well, so besides that, I do like in the chemical sector, I mean, I like SRF. SRF already got into a trend, and now after a brief consolidation, I think it's ready for a new round of momentum, and I think this stock is headed to go towards 2700, 2800. So I think this also makes it a fair value right now. So SRF is another stock to my liking. And for a trading strategy, I would look at Tata Chemicals, because Tata Chemicals also slowly we are seeing some elevation in the price level. So I would be looking at a target of 1180, 1190 with 1100 as a support.
Okay, so that's SRF and Tata Chemicals from the chemical space that you like, two specific picks there. And from the fertilizer space, it's Deepak Fertilizers, GNFC for you as well. Apart from these two spaces, the other space that's catching attention, and you were talking about sectoral rotation, the other sector that's now picking up pace is the pharma sector. Even today, the Nifty Healthcare Index is the top moving sector. Despite the overall muted trend in the markets, we're looking at 2%, 2.5% surge on Nifty Pharma. And even the heavyweights are moving very, very sharply. Some of them at record levels as well. Sun Pharma, Dr. Reddy, Cipla, they're all moving up very, very sharply. Divi's Laboratories. How are you judging the momentum here on the charts? Which is the strongest counter that appears right now in front of you?
So strongest, of course, Sun Pharma has really done very well. So also is the case with TVs. But having said that, I don't say that there is upside is capped over here. But I mean, right now where the market is really at such high levels, I would be looking at stocks which are technically well placed, where I know my risk reward ratio would be favorable, and hence I would choose Biocon at this level. In fact, even in the mid cap category, if you see Sun Pharma, Advanced, Strides, that is Star, they still have a lot of upside scope. So these are the stocks to my liking right now for a fresh entry. But Lupin, Cipla, in fact, Cipla also has given a breakout. So Cipla would be well placed right now for a trading strategy, and we would look at a target of 1320. So, besides that, other stocks are already in a strong momentum, but these look good to me, attractive to me for a buying perspective.
Okay, fair enough. Sun Pharma, Cipla right there as the top preferred picks. Let's look at the FNO space also, Vaishali. I'll bring your attention to Aditya Birla Fashion and Retail, the top moving stock there with a 7.5% surge. How are you looking at the momentum here, and what would your advice be now to investors?
So ABFRL has been much awaited buy actually, because we have been tracking this stock since a very long time, and well, it has just been consolidating, and now seeing it has opened with a gap up and is showing a lot of strength. So I think well, fresh buying should be done a bit in decline, because we are already seeing a surge of it's up by 7%. So I think keeping in mind 230 as support, the rally has just begun, and I think it's heading towards the target of 280 to 300 levels. So that's how I would look at this stock.
Okay, from fashion back to what the Nifty is doing at the moment, trying to negotiate the 21,700 level as far as the options chain is concerned. Remember, this move is now backed by, in the last 2 or 3 minutes, by Reliance Industries. Remember, this is also the lone index heavyweight in terms of heft and size, which is in the green, now up almost 0.9%. 2611, and it's contributing 17 points on the green side as far as Nifty is concerned. Remember, Nifty is 61 points lower. If Reliance were flat, then Nifty would be another 17 points lower from 67. That would make it somewhere like 84 points. So you need to understand what the pullers and draggers are all about. But looks as if 21,700 will be overcome, because this is what is most likely the outcome, given the strength that you see in the Nifty. 307 p.m. in front of us. Let's just look at the broader market in terms of the volume that is coming into the system. It's more or less a very flat, volumeless day as far as the Nifty is concerned. HDFC Bank is the top traded counter, just nothing happening there. 1900 crores worth of transactions happening. Idea Cellular and BHEL are the next two most active traded counters on the National Stock Exchange. Idea about 1700 crores, BHEL about 1367 crores, and then of course comes Yes Bank at about 1314 crores. So this is how the structure is. Then you have index heavyweights, ICICI Bank, Coal India. Those are also again tepid volumes. Of course, Coal India is slightly on the higher side, but nothing great on ICICI Bank, just 1270 crores. So flat, dull kind of a market, trending lower as far as the index is concerned. Similar is the situation with Bank Nifty. 47,777 450 points lower. Vaishali, would you want to comment on the structure that you see developing on the Nifty and the Bank Nifty on the daily charts?
So I would say actually Bank Nifty right now is comparatively weaker as compared to Nifty, because Bank Nifty we are seeing that already it's showing since 2 3 days some exhaustion, and well, there is no participation. We are seeing some selling pressure coming in ICICI, Axis, HDFC Bank. Whereas in Nifty, we have participation coming from other sectors. So I think Nifty is still comparatively well placed, and we are well above the support levels. I mean, we are holding the support of 21 600, 21 550 band. Whereas Bank Nifty, the near term support, which was 47 900, 47 800, that has been broken, and we are seeing good selling coming in almost all frontline banking stocks. So I think it would be a wait and watch for Bank Nifty is weak.
Okay. On the metals pack, Vaishali, I wanted your opinion. Some of the stocks are doing very, very well today. Jindal Stainless up 4%, NMDC 2.5 to 3%, Nalco 2.2% higher, Ratnamani Metals up by 1%, Hindalco, Vedanta, all of them up in trade. How are you looking at the momentum here, and is this momentum to be chased?
Talking about stock individually, I would say Nalco, and that is National Aluminium, we were looking at a target of 140 levels, and we are pretty much close to that. Even Hindalco technical target resistance comes to 620. So unless and until we move beyond that to look for higher price targets, I would wait. I mean, I would definitely suggest that partial profit booking should not be ruled out. But still, stocks which still look attractive is Tata Steel, because we haven't seen much of a run up coming in this particular stock. So Tata Steel would be yet a stock that I would look at. SAIL is yet to finish off with its target. So Steel Authority is still a stock that one can get in with a disciplined trading strategy. So these two stocks are on my mind right now, and of course Vedanta would be just a very very with a strict stop loss, because that being a very high beta stock, I would look at Vedanta also.
Okay, you look at Vedanta as well. All right, we did talk about the pharma pack, and I wanted to understand the other defensive spaces as well. FMCG, IT. Do these pockets also interest you? Is there a momentum that you'd like to chase here? Any particular stocks that you'd like to highlight?
Definitely. If I'm not mistaken, I think last week we had spoken about it and I had recommended ITC. So
Yeah.
ITC very slowly it is surging high, and these are the stocks which should act as defensive. So it is ITC, it is Dabur, Marico. They all look quite appealing to me at these levels. But yes, ITC is top on my list right now.
And what is the next target you have on ITC?
So ITC, I would look at 480, 500 and 520. These would be the targets that I would be looking for.
Okay, got that. 0.3% of an uptick right now on ITC.
Okay, Sakshi, let's look at stocks that are hitting record highs, and they belong to the low ticket size, high beta space on the NSE 500. Well, it's Lemon Tree, now 9% higher. This is based on a research report that came out from Motilal Oswal Securities at about a volume of about 7 crore 71 lakh shares. It's a blowout both in terms of price and volume, and Motilal Oswal Securities has set a price target about 150, but for the moment a record high there. Then again you look at NHPC, almost 68 rupees, 2.2% higher, fairly strong volume coming in here. We've talked about the fertilizer space, 170 on RCF, about 1.58% higher. 2.6 crore shares have been traded on RCF. Again, Power Grid, GSFC, these are the 2 or 3 stocks that are doing rounds over the last 2 or 3 days. And of course, Shyam Metallics, then you have the likes of Tata Motors, as also Container Corporation, and Sakshi's favorite, her coffee brand is Starbucks, and therefore Tata Consumer is at a record high, 1096, 1.5% higher. Sakshi.
Right. The other space that we also discussed with Sharad before you came in, Vaishali, that's buzzing again is the oil and gas space. And I wanted to ask you, especially on the OMC counters, HPCL, BPCL, IOC, which of these, is looking strongest on the charts right now, and would you buy any of these?
So, well, in the morning itself, I mean, I was looking at all these OMCs, and I think HPVP, they all look good, but right now I am focusing more on BPCL. BPCL, well, technically, I think it still has a lot of upside. I'm looking at this stock for a target of around 480 to start with. So, this is one stock that I definitely feel that should, because it has given a lot of consolidation, and today we are seeing some buying interest. There is a pickup in volume also. So I would say with 440 as a stop loss, one can consider buying this. For a trading target, I would first come up to 480.
Okay, right. Apart from this, I'll take one more view on hotel space, especially. We've been looking at how over the weekend, especially from Christmas to New Year's, there was heightened demand all across tourist spaces in India. Roads getting chock-a-block when we talk about the hills. Lemon Tree Hotel already mentioned by Shell, but even EIH and Indian Hotels. How are you looking at these other hotel space stocks? They're all in a positive spot right now.
Yes, so you're very right. I mean, we saw good volume coming in EIH also. So EIH is the stock that we are focusing on right now. And I think let's see a follow-up buying tomorrow. Let's see how it goes. So if there is follow-up buying, I think this stock is ready for a target of 280 to 300 levels. So that's what I would be looking at. And it's also ready for a breakout. So I think this is a stock that one must keep on the watch list. And besides that, yes, Indian Hotel, all these stocks are looking pretty good with a positive bias.
Okay, let's look at the market now. We have just 15 minutes left, ladies and gentlemen. At 3:15, the Nifty is still 81 points below its opening quote, 21,660. Now, there are two ways to look at it. Should the index close above 21,680, that would mean that it has retested 21,680, which is the consistent low over the last 2 or 3 days. But should it fall below that, then we seem to have an issue in terms of profit booking. Now let's look at stocks within the Nifty which have opened, which have traded fairly strongly in terms of price gains, and then also look at top losers. Of course, it's been a pharma day. Divi's Lab and Sun Pharma are the top two gainers. You have a record high on Sun Pharma, 3% higher, 1297. And the digit has changed on Divi's Lab, now 4038, 3.4% higher. Then we have the high beta stock Adani Power, and then Coal India. Of course, Coal India running on that a very strong backing coming from Jefferies in its equity report. You have Cipla and Bajaj Finance making up the top 5 as far as the Nifty is concerned. On the loser side, you have Eicher Motors, M&M, both disappointing a lot of traders, a lot of investors in terms of how their December volumes shaped up. The fact is that both of them had also run up sharply, so some bit of profit booking happening here. Record highs seeing profit booking on Ultratech Cement as also on L&T, and Kotak down about 2.5% as far as Nifty is concerned. Let's look at the all-time highs within the Nifty. It's Cipla, Sun Pharma, Tata Consumer, Power Grid, Nestle, and Tata Motors. So this is how the structure is as of now. Within the F&O space, let's look at all times high apart from the ones that I have mentioned. So it's Aurobindo Pharma, Bharat Forge, Zydus Life, Godrej Consumer, as well as UPL. Sakshi, there's a preponderance of FMCG companies and pharma companies in the list of new highs, as also in the list of top gainers. It essentially shows that the money that is being booked from blue chips, from a lot of other PSU stocks, a lot of profit booking is now moving into the defensive space of pharma and FMCG, where indices of both these sectors have hit record highs, but of course a lot of stocks are still trading below what were traditional valuations. Sakshi.
Absolutely, Shell. So that's as far as the sectoral rotation and the shift of money is taking place. But still, Vaishali, I'd like to ask you, especially in the small ticket PSU space, are there any stocks that one can still hold on despite the kind of stunning rally that we have seen? Now, of course, we've seen several pockets and we've discussed with you over time as well, be it defense, be it railways, be it the PSU banks. Where do you see promise holding on for the entire 2024 as well? Say if somebody is still looking to invest in the PSU space, is this a good enough time?
I would say, well, at this level, it would be a bit cautious strategy, but I would say why not accumulate in trenches? So right now, as we are seeing that yes, the PSU banks, the small size banks, like talk about Bank of India, Canara Bank, even the rail stocks like Aircon, RVNL, they are all technically quite well placed. There is no damage to the trend. In fact, they are all in the consolidation mode. And we spoke about SAIL, Steel Authority of India. So these stocks, I think they still have a lot of scope for an upside movement. And in fact, in the PSU banking sector, SBI has hardly shown any movement. So SBI is another stock. So why not look into these stocks and which are fundamentally also strong and well, good scope for an upside.
Okay, fair enough. Apart from this, Vaishali, are you looking at any of these, stocks which are related to the stock markets? Because these stocks like, Bombay Stock Exchange, for example, Angel One, ICICI Securities, CDSL, they're again making some kind of a momentum comeback. Is this a space that you'd like to take a buy in?
I definitely would agree. Actually, CDSL, if we talk about, so CDSL is one of the stocks which I think one must have in everyone's portfolio because long-term time projections, if you see, we are looking at a target of 2100, 2700, and well, the support now lies at 1700. So this is one stock which I would say one must have in their portfolio. And besides that, well, BSE, we have seen a good run-up. So I would say that let's wait for some decline. But besides that, I mean, look at CAMS. CAMS also looks very good at these levels. So that's one stock that I would be thinking that yes, there is a lot of scope. It has not given us as much returns as we would expect it to. So, well, this is another stock that I would call a buy.
Okay, we are at 321. It's slightly dangerous to now take views because definitely Nifty will now end lower. It'll probably show a 72, 75, 80 point downtick. Remember, this will mark possibly the end of a very long winning streak, which is 1, 2, 3, 4, 5, 6, 6 days in a row, and probably that will also put some sanity into the market. Let's look at the Nifty Bank. What's really interesting is that it is now, yes, this is what I wanted to point out. It's a weekly low on the Nifty Bank, and the price of 47,750 is now below the 10-day moving average. Again, for those who have a bit of interest in charts, that basically points to maybe a short-term flip in the trend that was before. So this is how it looks like when you look at the kind of profit booking that's happened on the PSU space. That's pretty substantial. As I have maintained that I track somewhere like 78 PSU stocks. Today's list of losers is 22. 1 second. Again 22. That makes it about, say, Sakshi, 35 stocks out of 78 have now closing in the red. That itself talks to you about how momentum is now taking a pause and people are being sensible to book profit away. Remember, on January 11th, you will have the first quarterly earnings coming in, and that again will set the tone for where markets will move from those levels. But for now, there is caution in the wind, and we've been telling you to face caution and to look at stop losses and to not be overtly bullish over the last 2 or 3 trading sessions. Sakshi.
Right. Vaishali, any BTST or STBT trades you'd like to recommend?
Well, I'm looking at SBI cards. If you see SBI cards, it's just picking up momentum, and well, I think one can look at a target of 790 from here on, and stop loss would be 766. So this is one stock that I would focus on.
SBI cards. Okay, understood that. Right. Apart from this, let me just quickly mention some of the momentum stocks as far as the Nifty 500 stocks are concerned. We have been talking about the fertilizer and the chemical space. The one stock that's inching higher is Epigral, 6.2% higher in trade from that space. Gujarat State Fertilizers is up by 5 odd percent. I think this is the 4th day running when the stock has been up in trade consistently. Then we are also looking at some small ticket pharma names too, apart from the big wigs that we've already discussed. So you have GlaxoSmithKline Pharma. This was also mentioned as a pick by Vineet earlier in the morning. Gland Pharma, Alembic Pharma moving up in trade as well. Eris Life Sciences, you have Dr. Lal Path Labs from the laboratory space that's also inching higher in trade. So these are some of the chemicals, and then of course the pharma names that are picking some kind of momentum in trade today. Clearly a day belonging to healthcare stocks. Oil and gas and metals also follow suit, but rest of the sectors are inching down, especially when we talk about the losses in the auto space. They are the ones that are lagging behind, 1.3% down in trade, followed by banks, IT, and even the PSU banks now slipping into the red. The mid and the small caps also now down about 0.2% odd. But talking about autos, Vaishali, what is your entire sense on the entire auto basket and the auto ancillary space? Is this a space that will show us some interesting moves in this year?
Well, so I think we've seen a good run up already coming in most of the stocks. So I would say that yes, now the stocks which are not performed, which have so far not performed, are Maruti still has a scope of an upside move. So also is the case with Ashok Leyland. Two-wheelers, I think they may take a breather. Let's wait and watch till we see a new round of momentum coming in. But well, I think fair value would be Ashok Leyland, even Maruti. And besides that, I would still look at Samvardhan, Motherson Sumi, what we used to call. So these are the stocks which have not yet participated. And if auto has to continue, then these stocks have to buck up. So yes, these are the stocks I would look at for now.
Okay, I think Samvardhan Motherson is coming up as a consensus buy. In fact, four of our analysts today, Shell, have talked about Samvardhan Motherson, and this is right after you talked about this stock yesterday before the markets had hit open. So kudos to you for selecting this one, and this is now on the top of the minds of all the analysts that we are talking to.
I also get lucky, and I think Motherson is one of those trades. I'll give you a very simple reason. See, Samvardhana Motherson is India's second largest auto ancillary as far as the sales are concerned, and there is no reason for this stock to be where it is. It was under pressure after a demerger, and from that point of time, it's been a huge underperformer. The all-time high, if I remember, was 150 rupees, and then it corrected fairly sharply to 60-70 rupees. Now, if you look at about 105 now, and if you add back the price of the demerged company, which is Motherson Sumi Wires, at about 61, the stock is already at an all-time high. But the fact is that people are looking at it from the point of view of 150 minus 100, which means another 50-point uptick that is possibly there. If you look at how Maruti is expanding, if you look at how Tata Motors is expanding, all of these also flow back into ancillaries. Maruti is a collection of auto ancillaries coming up with a car, and the largest contribution in any particular car in terms of volume is by Motherson Sumi. So it's a no-brainer even at current levels. it should shine and shine brighter. Sakshi, but thank you for pointing out.
Well, absolutely. All right. Any other trend that you would like to point out, Vaishali, before we wind down the session that one should be watching out for in the few days to follow in the week?
So, well, today only we have just written a note on Bajaj Finance. The stock has been an underperformer. And talking purely on technical terms, you see, it's just making, there's a formation of higher bottom. So we would, the risk to reward ratio would be very favorable from here on. So we have recommended this to our clients, keeping a strict stop loss of 71.50. And once the stock moves higher, say about 75.50, I think this brings in more conviction for the stock to move higher towards 7,800 and 8,000. So I am looking at Bajaj Finance in the frontline category.
Frontline category, Bajaj Finance. All right, Vaishali, thanks a lot for being with us on this special edition and sharing all these wonderful stock ideas. We'll touch base again, but it is one day when you're actually looking at profits being seriously taken off the table when it comes to the benchmark index. It's now down 82 odd points for the Nifty, 21,659 currently. And of course, the big laggards include heavyweights from the banking and the IT space. The Nifty Bank, it's clearly the index that's slipped over a percent, so that's the one that's underperformed. You can see the closing levels now, 47,713 coming in on the Nifty Bank as well. The mid cap index down by 0.16% at 46,399 odd levels. The small cap 100 index down by about 0.2% odd at 15,184 kind of levels coming in. Barring healthcare, oil and gas, metals, media stocks, rest of the sectors have all slipped. It's the autos that are the biggest laggards today in terms of sectors, 1.3% down in trade. Private banks follows next, 1.2% down in trade. Realty and IT and the Nifty Bank, the five big sectors that have not participated in the rally today. In terms of the Nifty 50 gainers, you have Divis Laboratories topping the charts today, ending the day with almost 3% gains, 4,037 the level. Adani Ports up by 3% again. Sun Pharmaceuticals, Coal India, Cipla, Dr. Reddy's, Bajaj Finance that was mentioned by Vaishali just before she left. So about top 5-6 gainers as far as the Nifty is concerned. Laggards includes Eicher Motors, 3.5% down in trade, 38.94 after the stunning rally, profits being taken off. Ultratech Cement, 10,205. M&M down by about 2.5%. Kotak Mahindra Bank, L&T, the top laggards as far as the Nifty 50 stocks are concerned. All right, and with that, we will wrap up this special edition. But do stay tuned on to Business Today TV as we continue to track all the news flow that will be impacting the markets as well in tomorrow's trading session. So do stay tuned. Many thanks, Shal, also for being with us on this special edition.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.